Social networking startup Nextdoor seeing massive growth during the pandemic, with nearly 1 out of every 3 households in the U.S. using the service. I got the chance to catch up with CEO Sarah Fryer in a wide-ranging discussion covering the company's expansion and growth, IPO plans, and more. Take a listen.
The last year has been terrific for the Nextdoor platform. Local has never mattered more, and that's brought a lot of people to our platform. They're coming for that trusted information. They're coming for the ability to give and get help, huge during a pandemic, and they're coming to make real-world connections. And so what we saw in our business is we're now in 1 in 3 households here in the United States. I think when we spoke last year, it was 1 in 4. We saw our DAU grow 45% year over year. And we saw our most active members actually come and go deeper into the newsfeed. So impressions per DAU are up 20%. So it's been a great story from the platform perspective.
So you've seen this acceleration throughout the pandemic, but what does Nextdoor look like post-pandemic? Will people continue to use it for the same things, different things? Are there habits that you are already seeing will stick as economies reopen? And essentially, can you sustain the kind of growth that you've seen?
Yeah, we absolutely believe we can. So I think, first of all, we have become a habit. I love that you use that word. So people have come to know Nextdoor as that place when they want to go hyper local. We put a lot of work in last year around things like business tools to make sure that we are that place, not just for residents, but also for, say, a local business, a local plumber, a service provider, or even a public agency.
We've seen a number of other companies that have benefited as well from pandemic trends. We've seen them go public over the last few months, sort of taking advantage of this moment to show strong financials over the last year and also take advantage of, really receptive market conditions for new listings. How are you thinking about a public listing?
So the first question to answer is always, do we need to raise money? And if we did, could we really use it to accelerate our business? And I think for Nextdoor right now, the answer is yes. If we raised money, there's a lot of great things we could put it to. And of course, we want the platform to feel like it's really speaking to you. So there's a lot of investment we can do around things like machine learning, artificial intelligence even. So that's a good reason to raise. Of course, you need to be ready to be a public company. So I want to make sure that we do that well. From my experiences at Square, that's important. And the market needs to be ready for you. And you're right, the market is certainly in a very healthy spot at the moment.
Then, as you said, you've taken a company public before, Square. What are you looking for to tell you when the time might be right?
So one is definitely scale, which I think Nextdoor has. 11 countries, 276,000 neighborhoods, 1 in 3 households in the US. The second is, do you have a really good monetization engine? And what I got excited about coming to Nextdoor is that I could see that it was there. We built the platform and the ability to now bring on advertisers. Right, this is a very well understood business model, and we're doing quite well with big brands, the Walmarts, the Home Depots of the world, all the way down to those small local businesses. And I think that may be some of Nextdoor's true differentiation and secret sauce, is that ability to go hyper local.
Have you been approached by any blank check companies? Is that something you're considering?
In the end, I want to come back. It's a fundraise first and foremost. I think the how you do it, of course, there's a lot more flavors in the market, and you want to pick the one that's right for your company. But I don't know if I think they're really ultimately that different from one another. So for us, it's really, do we want to raise? How much? Can we put it to work? And then making sure that we're ready to be a public company. That's what's top of mind, not necessarily the process of how to do it.
Right, and perhaps the right investors as well, right? I know that Nextdoor's existing investor base has been really helpful to you.
Yes, 100%. When you put people like Mary Meeker in bonds in our last round, folks like Bill Gurley from Benchmark who've been with us for a long period of time. I mean, these are folks who really do make a difference for you, both in terms of helping you with strategy, with execution, and of course, helping you tell that story broadly.
How are you thinking about the upcoming changes to Apple's iOS and some of the privacy controls, asking users to opt in or opt out? How is that going to affect Nextdoor?
Nextdoor is a proprietary platform. We have first-party data. We have built out our own ad tech stack. And so in some ways, it may actually be helpful to Nextdoor because it allows us to catch up to others that are older companies that have been around longer, but we're able to really make use of that proprietary data in order to have the best possible outcome for our advertisers.
Right. So does that become a competitive advantage once these changes to iOS go into place? Because, we've heard Facebook talk a lot about how it's going to hurt small businesses on its platform. Do you think there's an opportunity for them to come onto Nextdoor? Are you guys making that pitch?
I think it's definitely has potential. As I said, I think for us, it's about how do we go deeper on where our core competitive advantage is. That's that proprietary network, our own ad tech stack, and the fact that we've garnered this trusted relationship. And so in the case of, say, a small business, often they're on the platform, not just as the small business, but often they're there as a neighbor first and foremost. So we think we're a very welcoming platform for exactly that reason.